Well, in the modern world, surely with things like AI are actually allowing that to happen. You're probably not speaking to your human being, speaking to a bot or what have you. I mean, obviously the leading questions, and yeah, quite simply, I think some of the things we do, which is submitting cases at 10 o'clock at night for clients to get it turned around, uploading the documents.
Yeah.
It's really where you get the big wins. We're able to get those responses quicker and actually give better customer service. And obviously, the more once the client sees you in action, they understand it and instruct you. So on that, the way the industry is at the moment, we've been talking about a few things. AI. Where do you think? Where do we see that's influencing the property market and mortgages in particular?
It's hard to say, isn't it? I mean, when the internet came out, I remember that. So that was going to put everyone out of work. Do you know what I mean? And then we've been getting robots for the last 70 years. You know, they've been coming, someone's saying, the robot's going to take over. And it's going to be the same with mortgages, I think. I think the property market, how it'll impact that, it might get a few things done on the administration side, but I don't think we'll have robots building houses or AI building houses. They may do the designs and the architecture and draw the plans up, but everything's got to be input. But as far as mortgages go, there'll be a tool for us. I don't think there'll be a tool necessarily for a client to go direct to. Will they trust it? I mean, we've all had cases where we've gone on to, say, ChatGPT and asked it a question or something like that. And you were talking earlier, and it comes back with a load of nonsense. You know it's nonsense because it doesn't know. It makes it up. And I'm sure that'll get ironed out over time. But if it is going to have an impact at the front end, clients who, directly to the client, I think that's going to be a long way away before it's trusted enough to have a proper impact. I think it's going to sit behind us and help us do our jobs.
So what influences have you seen so far?
Helps us with our systems, sourcing. So, I mean, we have a system that tells us what everything costs, what the cheapest rate is. It helps us, I guess, with our processes. But I don't think it necessarily, like you talked about trust, and I think that's a really important thing when it comes to the client relationship is trust. I mean, as I said to you, I don't trust, I'll ask ChatGPT something, and sometimes I might get a decent answer from it. And sometimes it will be so off kilter that, like you say, it's not correct. So, I mean, if you've got that element already of doubt with AI currently, how could you possibly trust that?
Yeah, I can't say I've ever used it for anything. I don't think I've ever logged on.
It'll be in the background of a lot of what we do, won't it? It'll be in the background.
Yeah, I'd imagine. I think on a client side, what it's probably going to do is be able to scrape huge amounts of data off the internet and give it to you. But then you're probably still going to come to a human to question that data. And even if it's an answer, you might well come to a human to say, it's told me this, is that correct? Yeah. And you're going to be
take out a loan for £1 million based on what machines sold.
You can read 1,000 books, and then you see there's a professor and he's so knowledgeable, but you can read all those books and digest all that information. You'll still want to know from that professor, in your experience, do you think X? And when you're talking to ChatGPT, are you going to say, hi, ChatGPT, in your experience? Because it's taking the experience from multiple people, and some people may not even be, decent sources that you'd want to get information from.
Yeah. You'd hope that what it can do is help buyers, is help sellers, it's help everyone in all walks of life. You'd want it to be able to help and be a very good assistant to them. Yeah. And that maybe is what it would be. It would be admin. It would be making sure that we're always on top of, maybe people's end dates or, reminding to check in with people, little things like that will help you become a better broker.
Little things are actually factual because...
Yeah, you need it to be factual.
So much grey in what we do that it's opinion and automation. Yes, it can do so much, but when it comes down to what I believe the value of that property to be, again, we went to a lender the other day who someone questioned why isn't the bank doing 100% AVMs? That's automated valuations. And the bank's going, why would we do that? Yes, we're going to do as many as possible because it's cheap as possible, but there's a risk there. We still need a human interaction there.
Yeah.
It's like, are you going to get on a plane without a pilot? Even though we know the plane is actually flying itself, every now and then the pilot takes control, but you're not going to get on that plane without a pilot flying you across the world, are you?
Yeah,
I don't know. I wouldn't anyway.
Certainly not.
No, I wouldn't.
I'd be interested in seeing its advancement and how it helps.
I'd be interested in 100 years what it'll look like.
Look, in 10 years' time, we might maybe seeing a completely different landscape. But I think it'd be sort of
Yeah, I think when my boy Frankie's 6 now,
Yeah.
when he goes to get a mortgage, well, maybe the way we own houses will be very different then.
Yeah.
The way we finance them is going to be very different.
Well, there's a whole thing of what 70% of the jobs our children are going to do aren't even jobs yet.
Yeah.
You know, and actually when I was at school, and probably you were in it's just started your career.
All right, bud.
A mortgage broker wasn't actually a thing.
He started
just rolled up into financial advisors.
Well, it was building societies. You had to go there and get your money back in the day. And then I think the first brokerage was John Charcoal. And I worked there, but not right at the start. I joined later on. And they sort of started doing these 2-year fixed rates and things like that, which didn't really exist before. Then the banks got on board and they all started offering them, and then more brokers came in. So, yeah, the job didn't exist. I think it was...
So the way people transacted
compared to the 60s. Yeah.
So what it will be in 10 years' time will be different, but there'll still be a human element. I mean, again, when you used to have to go to the building society or the bank, it was a human being saying, decide whether they liked you or not. Do they know your parents? And do they like the parents? And then I'll think about lending you 3 times your salary if I like you.
We had to save up the same amount that the mortgage payment would be for so many months or years to prove you'll be able to keep the payments up. Yeah, which is crazy. But
very old school underwriting.
Very little repossessions in those days, but they didn't lend much.
Incredibly prudential approach, yes.
Maybe we'll go back to those days, who knows?
I think what it is, maybe we do live in a world now where you want to be incredibly accommodating, you want to be as good for all buyer profiles and buyer types as you can be. And there are going to be people who would would almost want to do most of the job without actually having to pick up the phone and speak to someone. And you've got to adapt your business to make sure that people that want to be a bit more machine or chat-led have the ability to do it, but you can still be there to help them when it's needed.
I think with mortgages,
you don't want them to make mistakes.
People don't want mortgages, they want the house, don't they? So to take the mortgage on is ultimately, it's a very emotive subject, particularly for a first-time buyer. And they may ask the dad, and the dad's been through it before, and he'll give them some advice, dad or the mum or whoever in their family. But ultimately, they should lean back on a broker just to hold your hand. Maybe you're right about everything, but maybe you're not. And that bit you're not right about because somebody's guessed or heard it in the pub might cost you a lot of money in the future by making that mistake.
I think in the marketplace that we're in now, if you talk about the housing market itself, if you talk about the mortgage market, this is an era, a timeline of incredibly high levels of speculation, and fairly wild and aggressive speculation on all sides of it.
It's just the way social media and all that goes now. It's just everybody's fighting for attention by spreading rumours effectively.
Yeah.
And the government are probably guilty of that as well. So,
but it would be a mistake to not embrace AI.
Because, when you're going down that route,
you want to be a forward-thinking company. You want to be, up to date with your systems to make sure everything is sort of streamlined. And we do that, as much as, actually I think recently we've gone through a whole new rebranding. And I think it's part of being present, of accepting it and moving with the times.
But obviously with any industry will take you along, the AI, you've got to embrace it and what have you. I mean, who would have thought 5 years ago we'll be sat here doing a podcast, It's,
I agree with that. Yeah.
So we are forward we are forward thinking, and
we are very forward thinking, yes.
It's a vlog.
Pride myself.
Podcast, sorry.
Forward thinking.
Things will change, things will adapt, we will be at the forefront.
What do you think?
Sure.
I mean, you're the business owner.
Yeah.
How are you going to adapt into
the thing? If anything, I mean, look, I've been doing the job in the industry for 22 years, feels like yesterday, but the changes you see happen very gradually. The market, the ability to lend and the willingness to lend changes all the time. It's a very, credit crunch where banks stop lending. Being a mortgage broker then was great. You couldn't even do your job. Even you had a really good case at 60% loan to value, banks were going, nah, I'm not sure about that. What? To actually then turn around when they want to chuck money out there, left, right and centre, and then something happens. For example, COVID, the market froze, and then the risk guys in the bank go, last thing, the market's going to crash, it's rubbish, blah, blah. We're expecting a 20% drop in house prices. What happened in June, July 2020? The market just blew up. And then the government put a bit of stamp duty holiday on there, and it just went absolutely mental. But during those few months, the risk guys in the bank could try to say no to everything, and yet the demand was there, and it was just you had two.
Yeah,
forces.
I think what isn't taken into account there is what makes the property market unique, and it's the human desire to move house or buy something. These are not stocks and shares. Yeah, absolutely.
But the point I'm making is it's actually human beings that are actually trying to play with what they're predicting the market. And obviously, if you had a risk in the bank, you're looking for danger signs rather than being the sales side of the bank who's trying to hit their targets. You get sometimes the risk guys take you down a different path. So where I see things going, and my background doing my civil engineering degree many moons ago, is that engineers, they push so far until something goes wrong, and then they have to put it all the way back.
The breaking point.
There's the famous one up in Dundee, the railway bridge collapsed 120 years ago because they tried to do it too cheaply and what have you. Trains going over it, and then the whole bridge collapses. So what they then do is they go back and look at why did they not put enough steel in, redesign it, and the risk guys get hold of it, and actually. And then it goes again, and then the next engineers came in and forgot about it 20 years ago and push it forward. So what you find is things change, but all it takes is one bomb to go off. One bank to do something silly, or the systems have failed and lose a few £1 million here and there, and then they go back and then they develop it again.
Recently, with one of the high street lenders, who I think they got in trouble for additional lending or lending more than they should have been doing.
That's a refund.
And then they've gone the complete other way. And now they are super cautious. Their timeframes, it's checked by one underwriter, second underwriter, it's got to go to a third. And we know that that lender is very slow. Well, it can be slow, depending on what. It's not always very slow, but depending on.
But it's a good example as to how things go when the risk guys get involved.
They've had to undo what they've done.
So are they actually going to go, right, technology, AI? I mean, the technology's been there for years. I mean, there was a company called Adeus in 2007 that used to do auto valuations 85% and do mortgage offers within 24 to 48 hours. So it's actually been there for a long time.
That's Birmingham Mitchells, wasn't it? They had the 24-hour mortgage. Never was 24
exactly.
hours.
And then the credit crunch hit, and then that just it got left there for quite a long time. So and that's a good example. Technology's there, the credit crunch hits, and they have to then take a low step back to get back to where they were back then, and it will go like that. So where do I foresee it? It'll only get integrated. Probably processing jobs and things like that may be taken out of the equation because everyone's looking to save money wherever they can. But the advice side and all the anomalies with buying property and taking a mortgage out, property values, type of properties, there's so many little anomalies out there that a computer will either guess at it in the same way as ChatGPT does and get it wrong. And then it just takes one really bad thing to happen. Then Mr. Risk will go, no, we're having this back now, and then take steps back.